In today's show, we'll be discussing the Bitcoin price as two bullish crosses suggest a new 2019 high is in play. We'll also be talking about the BTC price possibly breaking the longest weekly losing run since November of last year. And of course, we'll be talking about the Bitcoin price action. As you can see, the entire market is in the green right now, and that's very bullish for Bitcoin, which is up 2.76% for the day. Where do we go from here? Find out all that and so much more in today's show. All right, so let's get right into it with these two bullish crosses, which suggest a new 2019 high is in play. Bitcoin is back doing BTC things, and anyone who bought the dip around 9,350 local bottom is a happy camper. Surely those who employed a little leverage on that entry are even happier. As you know, you can trade with up to 100x leverage using Bybit, and right below this video in the description, I included my referral URL, which you can use to create a free account. And if you deposit 0.2 BTC, you will receive $110 in free BTC as a bonus that you can apply to your trading. I've also included a tutorial right below this video along with that referral link walking you through step-by-step how to long or short Bitcoin on the Bybit platform. Before looking forward, let's take a moment to review the keep it simple, stupid approach to trading. On September 2nd, the moving average convergence divergence, which is called the MACD, pulled off a bullish Bitcoin price crossover, and the histogram flipped positive on the daily time frame, as you can see in this graph. The MACD and signal line has yet to cross above zero, but on the shorter time frames, it has already taken a bearish bias. This suggests that those who have missed the 16% bounce off the local bottom of 93.50 might consider sitting on their hands for a minute. However, it is well known that the MACD is a lagging indicator. An assortment of leading indicators suggests BTC/USD is bullish, so one shouldn't view the MACD in isolation. This is a very important rule to keep in mind. While a somewhat unconventional way to assess price action, the daily RSI managed to pop out of the descending wedge after dropping to the predicted touch point at 37, as you can see right here in this graph. As of late, double bottoms have typically led to strong bounces, so they are worth keeping an eye out for. The tweezer bottom at 93.21 was a signal that a turnaround could be possible. For example, Philip Swift recently pointed out, this is one of the reasons why I like the 111 DMA. A lot of people talked about the 128 DMA or the 20 WMA, which is even lower. Anyone who was waiting for the price to hit those got front ran. Historically, while they do get hit, on occasion they get front ran, like we saw here, as you can see in this chart. Since June 22nd, the Bitcoin price has been a swing trader's paradise, and it seems the party will continue. The current move has a target of 11,050, which touches the upper arm of the Bollinger Band, and a stronger move can extend to 11,255, which is right at the upper arm of the massive wedge. In the event of a pullback, BTC price could drop to 10,255, which is right on the 20 MA of the Bollinger Bands. So the current market structure remains bullish. Bitcoin above 10,000 is a good sign for the bulls, as the recent drop was nothing more than another touch on the lower arm of the pennant. The weekly recovery also placed BTC back in the narrowing pennant. On Tuesday, global macro investor CEO Raoul Pal tweeted, "If you don't have any Bitcoin, BTC, hashtag Bitcoin, then this looks like the last time to board the rocket ship." I love wedge patterns like this. They have a high probability of success. Good luck. There is a shit ton going on in macro land. Meanwhile, bigger moves are brewing. Traders should expect some sort of decisive move on or around September 15th to September 23rd, as this brings Bitcoin closer to the vertex of the narrowing pennant. BACT is expected to launch on September 23rd, right around the corner, right? But is it possible that the event is already priced in and will not have an immediate impact on Bitcoin's spot price? What do you think? Even if BTC tilts to the downside, there's still time for consolidation within the larger wedge, which extends to November 11th, assuming BTC continues with the current range from 9,500 to 11,500. One thing to watch for is declining bull and bear volume as volatility tapers off and Bitcoin comes closer to setting a lower low below 9,100. This shows the consolidation is weaker than desired and prone to an assault from bears over the short term. A move to 11.4 followed by 12.50 1250 could be more convincing. It would show that the trend reversal is confirmed. Bitcoin price will be back on track and it can make it to 12.3 over the coming weeks, and the volume profile visible range shows minimal resistance selling pressure above this point. And you can see those price targets right here outlined in this graph. And in the description below this video, I've included this incredible article resource for you to check out for yourself. All right, and in other news, the Bitcoin price may break the longest weekly losing run since November of last year. Bitcoin is flashing gains on a week-to-date basis and appears to be on track to end its longest 7-day losing run in 9 months. BTC last chalked out losses for 3 straight weeks in November 2018. Back then, the crypto had dropped 12.56, and 29.15% in the first, second, and third week, respectively, as you can see right here in this graph. November 2018 sell-off saw prices nosedive from $6,544 to $3,474. BTC received the bear market, or the sell-off, from the record high of 20,000 with a drop below 6,000 in the second week of November, and the price bottomed out at 3,122 in December. Compared to that, the latest losing streak looks less damaging and is part of a multi-week consolidation representing bullish exhaustion following a stellar rally from 4,000 to 13,800 in the second quarter. If prices print a UTC close above 9,767 on Sunday, the 3-week downward trend would end. Meanwhile, BTC will chart its first 4-week losing run in 3 years if prices close below 9,767 on Sunday, which it doesn't look very likely. That said, BTC is likely to eke out weekly gains according to historical data. As seen on this graph, BTC charted multiple 3-week losing runs throughout the 2018 bear market. However, despite the strong bearish mood, the crypto repeatedly managed to stall the sell-off by scoring gains in the 4th week, although more often than not, the relief was short-lived. As of now, Bitcoin is in a bull market. Further trading volumes dropped over the last 3 weeks, a sign of a bear trap. That said, the probability of BTC closing the week with losses or on a flat note will rise if the recent trading range of $400 is breached to the downside in the next 24 hours or so. BTC has largely restricted to 10.4 to 10.8 trading range, as you can see right here in the graph. Since September 3rd, essentially the rally from August 29th's low of 9,360 has run out of steam. A high volume break above 10.8 would imply a resumption of the rally from 93.60 and could yield a break above $11,000. All right, now let's take a look over at CoinMarketCap. We can see the BTC dominance currently 71.2%, and it's currently over 72% according to TradingView. We can see Bitcoin up 2.75% for the day, Ethereum up 2.57%, XRP is up 0.61%, Bitcoin Cash is up 2.57%, Litecoin is up 2.71%, and as we scroll down, we just see a sea of green, with a few coins, of course, still in the red here and there, but the majority of the market right now is definitely bullish. All right, now let's take a look at the biggest gainers. We got XMAX up 46%. Holy shit. Agar coin up 31.19%, Nexo up 14.79%, Dragon Coins up 11.18%. What a cool name for a project, right? Komodo, another dragon term, right? Up 9.75%, Factum is up 9.24%, and Algorand is up 8%. Now let's take a look at the biggest losers. The biggest losers for the day are Energy Coin again, Wink down 7.48%, Maker down 0.7%, Digibyte down 7%, Walton Chain down 6%, Synthetics down 5%, Engine Coin down 5%, and the bleeding continues for these alts. All right, now taking a look over at the BitMEX margins, we can see that the bulls are dominating the bears, currently with 132 million in superiority, and the exact percentage breakdown is 52.28% longs versus 47.73% shorts. And taking a look over at the Crypto Greed and Fear Index right now, it's a 43 in the market, which indicates fear. Yesterday was a 41 indicating fear. Last week was extreme fear with a 20, and last month we were at a 59 with greed. And just in case you didn't know, here's the breakdown measure between greed and fear according to this index. The crypto market behavior is very emotional. People tend to get greedy when the market is rising, which results in FOMO, fear of missing out. Also, people often sell their coins at irrational reaction of seeing red numbers. Very true, right? And with our fear and greed index, we try to save you from your own emotional overreactions. There are two simple assumptions. Extreme fear can be a sign that investors are too worried. That could be a buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. Therefore, we analyze the current sentiment of the Bitcoin market and crunch the numbers into a simple meter from 0 to 100. 0 means extreme fear, while 100 means extreme greed. Now let's take a quick look over at the 4-hour Bitcoin chart so you can see where we're currently at, trading at $10,859 at this level. We peaked at about $10,900, and I think we are well on our way to surpass that critical $11,000 resistance. And if we zoom out here, this will provide some perspective on where we're at. You'll notice back on August 19th, we touched at about the $11,000 resistance, but we didn't break it. And then we consolidated, and then we started ranging, as you can see here. And then we consolidated some more. And then we just recently had this huge ascension going all the way up to where we're currently at, about the $10,900 range. Now, I would like to see us break that critical $11,000 resistance so we can continue climbing, especially with all the bullish news, with the backed futures launch, the ETF proposals, and all the economic uncertainty and shenanigans going on in our economy. Well, that's it for today's show. As always, I truly appreciate you tuning in. Don't forget to smash that subscribe button as well as click on the bell icon to receive notifications of the latest crypto news. And oh yeah, don't forget to check out the description right below this video. I've included some incredible resources to help you take your crypto game to that next level. Looking forward to seeing you on tomorrow's episode. Deuces.